Let's talk all things macro and maybe a little bit of technicals as well, of course, with the big dollar. Looks like it's shrugged off that disappointing payrolls figure in the States on Friday. And of course, this week is inflation week for his take on the new year and how yields have started the year. Peter McGuire from XM joining us again from Sydney. Good morning, Peter. Always a pleasure to have you back. Is that Christmas tree super early or super late? What's going on?
Well, I normally take it up. I put it on the 11th and it comes down on the 11th. So it's I've got to take it down either today or tomorrow, Annette, and good morning. You got to enjoy the spirit. You'd buy the beach and Christmas doesn't last long enough, does it?
No, see, it definitely seems more anticipation than delivery this time around, I have to say. So US payrolls, it's done a sort of bit of a head fake in recent months. It's either Goldilocks, too strong, not strong enough. But under the hood, It was a pretty good set of figures, really.
Well, yeah, it was. If you're looking from if you were a betting man and you wanted to pick the number, and the analysts are all forecasting 400,000, that's where, and over the last, say, year, they've been out, anything up to 50 to 60%. So this time they were out only 50%. And came in at 199. So that gives us an indication. It's hard to look at numbers. That's why you've got to look at technicals, you've got to look at the fundamentals, and you've also got to be watching the market minute to minute when news like this is released and what impact it has to, as you said, King Dollar, all the currencies, yields, and so on.
So the yields and so on. So bond yields continuing to rise and, of course, wreaking havoc in that tech sector. But by and large, what's the market price for March? Is it a done deal for Fed liftoff?
Well, pretty much so, yeah. They think that March is going to be there. I think it's about 80-odd% that analysts, again, are, expecting. So if that happens, then naturally, and I think that's been the draw card to the yields, we're at 28-month highs. Now, I've got to get this right. The last week was a 28-month. We haven't seen moves to the upside like that in 28 months, and we're sitting at January 2020 levels of 1.8% for the 10-year. So it'll probably creep up further. That'll push dollar up higher, and I think it's going to be a good, first 3 to 6 months for currency traders.
Now, of course, the detail that everyone jumped on that payrolls report was wages getting up there to 5%. But I think the joy is going to be short-lived because it looks like CPI this week could be close to 7%.
Absolutely, Annette. So, everyone's got their hand up for a big pay rise, and 5% doesn't cut the mustard when you're looking at inflation at 7%. So, and when you're looking at the real numbers, they're probably well in excess of that with the likes, and this is to the States, fuel costs, food costs, you look at stud lumber, you look at all the inputs as far as building materials and so on, food. So yeah, 5% doesn't, maybe you've got to get 5% a quarter to catch up, and that's going to be a real wake up for, the man and the woman on the street. We've already spoken, the last couple of months together as far as when you go to the petrol pump here and what you experience. So yeah, it certainly impacts the wallet and the purse, what's left over after mortgages or rent or whatever else.
Gosh, 5% a year, as we keep saying, we will be dusting off that wage price spiral. So, of course, it's not all about the US this week. China is also on the data docket. We're looking at inflation there. Their PPI is basically a commodity price index. That's still going to be fairly lofty.
Well, absolutely, that's right. And, that won't, I don't think it'll really hit us for any surprises. So, yeah, China, I'm keeping a very close eye on what happens there. I'm having a close eye on their property sector as well. The big ones are starting to fall. Are they going to meet, deadlines as far as bond repayments and what impact that's going to have? I would say probably, the latter part of February into March. That could be a real wake-up call for the Chinese economy, because we understand that it represents $62 trillion, the property sector, and dwarfs every other asset class in the world. And you've got the best part of, I think it's 11 million properties or so that are or might be about 90 million actually, that are uninhabited. So that really creates a lot of tension for every player across that sector.
So, of course, we need to watch Chinese trade as well. I mean, despite all these trade tensions that have been hovering over us, we still managed to produce a lot of trade surpluses with China. Is that expected to continue?
Well, it's going to be a hard one, Annette. This year is going to be full of surprises. So let's assume yes, but it comes down to the relationship that we've got between ourselves and China, there are many issues that are affecting the man and the woman on the street, from red wine producers to barley to all other commodities. And then you've got the AdBlue story as far as the diesel additive. So, yeah, it's going to be a fascinating year how it plays for the Australian sector. Globally, China's looking reasonably okay, but I think there are other markets that are possibly a little bit more attractive to venture into.
Well, let's just segue that into the UK, and we've got GDP coming up this week. We know the Bank of England snuck that rate hike in. What's that doing for the pound? Because some of our colleagues here and friends who went to the UK over Christmas found it pretty depressing. It was a bit like 28 days later.
Yeah, so I've heard that. Well, there's the other side, but you're looking at that pound will probably increase as far as its uptick. There's a big chance you're going to see in the next month. I think it's hit everyone between the eyes, another rate rise, and you could see 4 this year for the Bank of England. So that, again, opportunities for pound traders, opportunities for the cable against a host of other cross rates, and could be an exciting time. So, yeah, again, watching screens, keeping an eye on what the fundamentals are, look at your technicals, and then look at the seasonality trade. So, yeah, again, Annette, this is a 24-hour-a-day opportunity, 5 days a week, and it never ceases to surprise every trader in the market.
Well, speaking of surprises, despite the fact that OPEC just re-announced what was already policy, Omicron could be a restricting movement, and yet oil is going higher and higher. How much of that is, of course, geopolitical tensions with Libya and Kazakhstan, for example?
Well, it's got to have some sort of premium built in there, maybe a couple of bucks. We're at 78. I just made a note of that then, 78.50 for WTI. We've got Brent really, spanked through 80 with a very strong wind in its sail. We're at 81.50. So it looks like this week's going to be onward and upward for that for crude. And all of those factors are now got to be considered. What impact, again, inflation, cost. And we thought we may have had a bit of respite at 70, early $70, but it's onward and upward, and that's not a good sign for the consumer. Great if you're a producer, but certainly not too good if you're the man and woman on the street coming out of a wallet or a purse.
Yeah, it certainly is expensive. Let's just round out. We were talking about big dollar. What about our little dollar? Under a bit of pressure, 71 and change. What are the entrails telling you when it comes to near-term Aussie dollar pressures?
Well, probably a little bit further softness. It's been a great market to trade. I mean, the volatility and the big swings have just been electric, so it never disappoints. And I'm keeping an eye. That's why those numbers coming out on this week as far as China, that'll be a wake-up call for our Aussie and how that trades. So we might see a little bit further softness. King dollars, I think it's sitting there at about 95.8 or so. So it'll probably be through that 96 handle. And again, possibly a little bit further softness for dollar, but it's going to whipsaw. So it's a great market to look at because it constantly offers big opportunities, big moves, and what we've seen the last 6 months have been fantastic.